All right, if you're a commercial real estate investor looking ahead to 2026, you've absolutely got to have Indianapolis on your map. Today, we're going to break down the key data and trends that are shaping this market, and we'll show you exactly where the real opportunities are hiding.
So why all the buzz? I mean, what's the real story behind the numbers? Why is Indianapolis punching so far above its weight and becoming a true Midwest powerhouse? Well, it really boils down to one key sector that's showing some incredible momentum right now.
And here's your answer in a single number, 9%. That's the industrial vacancy rate. Now, that figure tells a powerful story because it represents a massive 180 basis point drop in just 1 year. Folks, this isn't some slow, gentle recovery. This is a flashing neon sign of surging demand in a market that is getting tighter by the day.
Okay, so here's our game plan for today. We'll start with the big picture outlook, then we'll dive right into that industrial sector boom. From there, we'll unpack the surprising split in the office market, scout out some new areas for growth, and then, yeah, we have to tackle the biggest challenge on the horizon, rising property taxes. And don't worry, we'll pull it all together at the end into a clear, actionable playbook for 2026.
You know, they don't call Indianapolis the crossroads of America for nothing. Its strategic location is just prime. When you combine that with major infrastructure upgrades and a really diverse economy, we're talking everything from manufacturing and tech to life sciences. You get this incredibly resilient foundation, even when the national picture looks a little shaky.
And that resilience brings us right to our first major trend. The industrial sector is, without a doubt, the crown jewel of Indy's market right now. For investors, this is where the action is, and believe me, the data is seriously compelling.
I mean, just look at this trend. Vacancy rates for industrial properties have basically fallen off a cliff over the last year. This isn't a slow trickle. It's a rapid market tightening that signals one thing very clearly. Demand is significantly outpacing the available supply.
So what's driving this big plunge? Well, you've got this perfect storm brewing. New leasing activity has surged an incredible 45% year over year. At the same time, the pipeline for new construction has actually slowed down. So high demand is meeting constrained supply. It's the classic recipe for a red-hot market, especially in key submarkets like Avon and Whitestown. And this brings us to a really crucial takeaway. This isn't just a local Indy story. Bigger shifts in the national market are creating what some are calling once-in-years buying opportunities right here in Indianapolis. For any savvy investor, that's a phrase that should make you sit up and pay very close attention.
Now, let's pivot to the office sector, which is, well, a completely different story. It's not a single market at all. It's truly a tale of two cities, with a clear and growing divide between what's happening out in the suburbs versus what's going on downtown. The key term you absolutely need to know here is bifurcation. It sounds a little academic, but it just means the market is splitting apart, with two segments moving in opposite directions. And understanding this is everything if you want to make smart moves in Indy's office space. And this table here lays out that split in stark terms. Just look at the vacancy rates. Suburban corridors are healthier, sitting around 18%. But downtown, you're struggling between 20 and 24%. The outlooks are worlds apart. Strong suburban demand versus a downtown that's getting squeezed by hybrid work. This tells you exactly where tenant demand is headed.
So, the crucial point for investors, the bottom line is this. The flight to quality is real, and it's speeding up. Tenants are actively leaving their older, less desirable buildings and making a beeline for modern, amenity-rich properties, which, you guessed it, are overwhelmingly located out in the suburbs.
Okay, so beyond industrial and office, where are the other pockets of opportunity? Let's zoom in on three emerging trends that are really shaping the future of the market: retail, sustainability, and some serious neighborhood growth. Let's break these down real quick. First, experiential retail. Think dining, entertainment, stuff you can't just click and buy, is proving to be remarkably resilient, especially in those high-growth suburbs. Second, green retrofits are delivering real ROI. We're talking higher property values because that's what modern tenants want. And third, you've got to watch the hotspot neighborhoods like Carmel and Fishers, where these huge mixed-use projects are basically building new, walkable downtowns from the ground up. But with all these opportunities, there is one significant headwind that every single investor needs to plan for in 2026. We're talking about a major spike in property taxes that is going to impact everyone's bottom line.
Get ready for this one, a 27% average increase in property assessments in Marion County. This is not a small adjustment, folks. It's a major hike that is going to translate directly into much higher tax bills landing in your mailbox in 2026.
So what's the plan? This timeline is your guide. Expect those higher bills early in the year, and you need to mark June 15th on your calendar right now. That's your deadline to appeal the new assessment. Also, and this is important, be aware that recent legal reforms have changed the rules around depreciation, which could create brand new arguments for your appeal. All right, we've covered a lot of ground. So let's pull all these threads together into a clear, actionable playbook that sums up the key strategies for investing in Indianapolis in 2026. So here it is, the 2026 Indianapolis playbook, boiled down to 5 key moves. Number 1, target industrial properties, period. 2, in the office sector, be surgical. Focus only on those top-tier, Class A suburban assets. 3, explore those mixed-use projects in the emerging growth neighborhoods. 4, seriously consider green retrofits for long-term value. And finally, number 5, get way ahead of your property tax strategy and be ready to appeal before that June 15th deadline. And that brings us to the final question. The Indianapolis market has some very clear areas of strength and some pretty complex challenges. The data points to a path forward, but ultimately the choice is yours. In a market like this with clear winners and some tricky plays, what will be your move?